the allowance for uncollectible accounts, and debit the bad debt expense. So I go through this overview of your financial accounting knowledge just because it's important to understand the relationships of the account. Because as an auditor, you're going to come in and you're going to look. You're going to expect to see debits and credits to accounts receivable. But you also want to make sure that those debits and credits to accounts receivable make sense. Are we only seeing debits to accounts receivable coming in from the sales journal? You should be able to reconcile those two, or the client should have a reconciliation of those two accounts. So when we talk about the sales account, and when you talk about any business cycle, you want to think about what are the major functions in that business cycle. What's happening? What kind of documents would I expect to see? What kind of records am I going to generate? What's the process? What's going on? What kind of transactions occur? And what accounts do those transactions affect? So with the accounts receivable function, the sales and revenue, sales and collection function, what we're going to see is things like order entry. Right? A customer calls in or a customer sends in a request to place an order with a company. That order has to be processed. That's what we call the order entry function. Credit authorization, very important, right? Because if you're selling on an account, you want to ensure that you're selling to customers who are able to pay, right? Because if you don't vet your customers and you don't do credit checks, you're selling your goods. You're selling shipping your goods. And once they're out the door, you have no more control over it. Right? You could certainly try to sue the customer for non-payment, but at that point, your inventory is gone. You haven't collected on it. Right? So you want to minimize you want to see that the client has controls in place to minimize, bad debts. Shipping is important. Why is shipping so important as a major function? What is it about shipping that makes it extremely important from a financial reporting perspective? Yes, Omar.
Like it could be possibilities of fraud, or like let's say they did not receive a shipment, or expenses as far as writing up false shipment.
Right. So fraudulent sales, right?
What's happened to the assertion of occurrence?
Right. It's tied to the assertion of occurrence, right? So what you're concerned with, is Omar pointed out and Ricardo tied to the assertions, was when we look at the audit assertions, occurrence is what? Occurrence is concerned with overstatement, which is what Omar was speaking to, right? You're concerned about overstatement. And so you want to know that the amounts that are recorded in the sales journal are tied to actual shipments, meaning they actually occurred. So controls over the shipping process or the shipping function is extremely important, right? Because that is the way we're going to test the occurrence assertion that management makes. Also billing, right? We don't want things to go out the door and we don't bill our customers, right? So you want to see if there are controls over billing. Then cash receipts would be the collection process, accounts receivable, updating the accounts receivable subledger, and then finally the general ledger, making sure that there are proper controls over reconciliation of the amounts recorded in the subledgers, that in the general ledger actually